Everyone is telling you the same thing. High interest rates have killed the BRRRR method. They're wrong. In fact, market volatility is the only time you can find the deep discounts required to actually make the math work. Most investors freeze when rates climb. But the pros, they know that when the easy money disappears, motivated sellers emerge and competition vanishes. We've analyzed the data from the current cycle, and the secret isn't fighting the rates, it's leveraging the chaos to force equity. Today, I'm walking you through a real-world case study. I'll show you exactly how to structure a deal in a high-rate market, the specific numbers you need to hit to ensure a successful refinance, and how to turn this volatility into a passive income machine. Let's dive into the math. Let's be honest. You've been watching the headlines. You're seeing rates climb, and your gut is telling you to stay put. You've heard the common wisdom, wait for rates to drop. The BRRRR is dead. It makes sense, right? The math that worked in 2021 simply doesn't work now. Your biggest fear is the refinance. You're terrified of spending $50,000 on a renovation, only to find out your new mortgage payment wipes out every cent of profit. That's a nightmare scenario. It's the negative cash flow trap. And because you're playing it safe, you're sitting on the sidelines. But here is the part no one tells you. While you're waiting for the perfect 3% rate to return, you're actually losing. Because when rates finally do drop, every single amateur investor who's been scared for the last 2 years is going to jump back in. They'll bid up prices. They'll trigger a feeding frenzy. And those deep discounts you need for a successful BRRRR, they'll vanish instantly. You aren't avoiding risk by waiting. You're just trading a borrowing problem for a pricing problem. And in real estate, a pricing problem is much harder to solve than an interest rate problem. Here is the secret most gurus won't tell you. High rates don't kill the BRRRR. They kill the lazy investor. When rates are low, everyone is a genius. Bidding wars are rampant. Margins are razor thin. You can't find a deal because everyone is fighting over the same house. But when rates spike, the competition vanishes. The hobbyists get scared and leave the market. That is exactly when the deep discounts appear. That is where the real money is made. Let's put this into a real-world case study so you can see the math. Step 1, the buy. In a low-rate market, this house would go for $160K. But right now, the seller is motivated. They're panicked. We pick it up for $100K using private money. Step 2, the rehab. We spend $20K on strategic updates. Not luxury, just functional. Our total all-in cost is now $120K. Step 3, the rent. We place a quality tenant at $1,500 a month. This proves the property's value to the bank. Now here is where most people freeze. Step 4, the refinance. You're thinking, I can't refi at 7%. But look at the after-repair value, or ARV. Because we bought so low, the house is now appraised at $180K. The bank gives us a cash-out refinance for 75% of that value. That's $135K. Do the math. Our total investment was $120K. The bank just handed us $135K. We just made $15K in profit. We have a cash-flowing rental, and we have zero of our own capital left in the deal. If rates were 3%, we would have paid $160K for that house. We would have had zero equity to pull out. We would be stuck. High rates force the price down, and that price drop is the engine that makes the BRRRR work. To execute this, you can't rely on traditional banks for the buy phase. You need a network of private lenders who care more about the equity than the index rate. This is how you build a portfolio while everyone else is waiting for the Fed to move. You don't wait for the market to change. You change how you play the market. So the math checks out. Even with higher borrowing costs, we walked away with $40,000 in equity and a cash-flowing asset. But let's be real, executing this manually is a nightmare. To find these off-market gems and secure fast funding, I rely on the private money lender directories linked below. Once the deal is live, I plug everything into my CRM to track the pipeline and use professional property management software to automate the tenant headaches. If you're serious about scaling, these tools aren't optional, they're the engine. Stop waiting for rates to drop. While the crowd is scared, the real wealth is being built. Check the description to grab those tools and start your own BRRRR. Hit subscribe to master the market before the window closes. I'll see you in the next one.